Hey guys, this is RG and I'm back with another video. Today I wanted to take a look at Boeing, ticker symbol BA. This stock has been making a lot of headlines lately, so I wanted to give you my thoughts. Boeing was once a proud company that has been forced to beg for a bailout due to its challenges with the 737 MAX as well as the economic challenges associated with the global sickness, which has really impacted the airlines and travel industries. Several airlines and travel companies are rushing to reduce costs and expenses in an attempt to conserve cash and salvage their balance sheets. Now, before we dive into the stock, I want to provide a little bit on Boeing's background and history. For those of you who may not know, Boeing is an American aerospace manufacturer that produces aircrafts, rockets, and satellites, amongst a wide variety of other products. Boeing is amongst the largest global aerospace manufacturers. It is the second largest defense contractor in the world, and it is the largest exporter in the United States. Boeing's global reputation has suffered after the grounding of the 737 MAX due to two fatal crashes in late 2018 and 2019. At one point, Boeing stock was trading at over $440 a share. Since then, the stock price has fallen to as low as $89, although it has recently recovered and is currently hovering at around $150 a share. Only a month ago, the company was trading at almost $350 a share, but has since then dropped by almost 60%. A drop like this is unprecedented for a company with a history like Boeing's. Recently, there has been a lot of discussion and conversation within financial media sources with regards to this stock, and I wanted to take a look to determine whether it is a buy. Boeing currently has an EPS of negative 1.12, which means that the stock is losing money. The P ratio is not available due to its negative EPS. These two metrics being negative are huge red flags. Without even getting into the financials, I can already tell that this is the type of stock that I personally wouldn't be interested in. As you can see, the market cap has dropped considerably, which is attributed to the significant drop in the price of the stock in the last several months. Finally, the PEG ratio is very high, meaning that the company is probably overvalued at this price level. Now let's dive into the financials to see if we can determine why the stock is struggling so much. Now, I'm no stock expert and the financials are not my expertise. However, it is clear that the company's year-over-year revenue increased between 2016 and 2018, and then suffered a significant $25 billion decline in revenue in 2019. I don't have to do any further research to know why the revenue declined in 2019. I think it is safe to assume that this is attributed to the grounding of the 737 MAX aircraft. Similarly, net income increased year over year between 2016 and 2018, with an almost $11 billion decline between 2018 and 2019, which again can be attributed to the grounding of the 737. It doesn't take a genius to figure out that the revenue and earnings have declined due to the two 737 crashes. Now let's take a look at the balance sheet to see if Boeing may be able to weather the storm. I generally like to focus on the assets and liabilities. I want to start off by comparing their current assets to current liabilities in red. As you can see, Boeing appears to have sufficient current assets to cover all of their current liabilities, but they have more total liabilities in comparison to total assets. Something to keep in mind is that many industries are capital intensive, which could help explain this. Overall, at first glance, the balance sheet does not look quite as bad as I was expecting. Now let's look at the breakdown of their current assets. The company appears to have over $102 billion in current assets, but as you can see, approximately $76 billion is made up of inventory, which doesn't bode well for Boeing. Personally, I don't understand how they can classify the $76 billion in inventory as current assets when you consider that these are very expensive $100 million planes. It's not like they are selling a $5 box of Girl Scout cookies. Plus, demand for these types of expenditures are dropping when you consider that most airlines are cutting expenses in an attempt to conserve cash and not become insolvent. I think it's safe to say that this company at the end of 2019 may have had $25 billion in current assets at the very most, and I think I'm being relatively generous with that figure. To make matters even worse, Boeing's current liabilities are at $97 billion. Keep in mind that they realistically only have $25 billion in current assets if you don't account for the inventory. They also have over $50 billion in deferred revenues. For those of you who don't know, deferred revenues are usually payments that have been received by a company for services that have yet to be rendered, which means that Boeing may have to pay that money back if they can't deliver their product. Overall, the balance sheet does not look good. I don't think there's any reason to continue to analyze the stock. I don't know whether they can make it without some type of government bailout, bankruptcy, or private funding from some type of an investment bank, but that's just my opinion. It's actually really sad to see such a successful and once prestigious company struggle like this. Boeing has recently been reaching out to private sources in an attempt to avoid having to seek a government bailout, according to many sources. This only leads me to believe that the terms and conditions associated with a bailout must be undesirable for Boeing. Even if they secure a bailout, there is no guarantee that the stock will be safe, especially when considering that after the financial crisis, the government secured several equity stakes as part of its bailouts. Only time will tell how this all works out. As far as I am concerned, the stock is definitely not a buy, at least not in my eyes. I think that 10 years from now, Boeing will still be in business, regardless of the path it chooses. However, as an investor, I can't help but think that unless it secures very favorable terms as part of a generous government bailout, the stock cannot be considered safe. With the rise in populism and the delicate political environment, I am not sure whether politicians will hand over tens of billions of dollars to a company. Nevertheless, I have been hearing that the airlines may secure a bailout, and the terms did not sound all that bad. So that may be good news for Boeing. I really hope that this company recovers and is able to recapture its former glory. However, there will be a tough road ahead. In summary, I don't think that the stock is a buy simply because of its current liabilities. They have approximately $97 billion in debt as of December 2019 that will have to be addressed within the next year. This debt burden will be difficult to service considering that they have about $25 billion in current assets if you don't account for the $76 billion in inventory. This amount of debt makes it a difficult buy in my opinion. But what do I know? I'm just a guy on YouTube. Please keep in mind that I am not a financial expert and I am simply voicing out my thoughts. Well, that is going to do it for this one. If you guys enjoyed the video, please feel free to hit the like button and subscribe. It really helps me out. I'll see you guys on the next one.